Petronas. On his right is Encik Adnan Zainal Abidin, Chief Operating Officer and Executive Vice President and CEO of Gas. On Datuk Tengku's left is Encik Adif Zulkifli, Executive Vice President and CEO of Upstream. Next to Encik Adif is Datuk Sazali Hamzah, Executive Vice President and CEO of Downstream. And on my far right is Puan Liza Mustafa, Executive Vice President and Group Chief Financial Officer of Petronas. Without further ado, I would like to invite our President and Group CEO, Datuk Tengku Taufik, to the rostrum to begin the session.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and good afternoon. Members of the media, addressing our chairman, Yang Bahagia Tan Sri Muhammad Baki Saleh, my valuable and endearing Petronas colleagues, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh and a very good day to everyone. Thank you for joining us today for Petronas' fourth quarter and full year group financial results announcement. Today, along with the team, I'll be sharing with you about Petronas' performance in executing our three-pronged growth strategy. This strategy remains focused on strengthening our core to grow our portfolio. Our Group Chief Financial Officer, Puan Liza Mustafa, will then cover the group's financial and operational highlights. Before we conclude today, I will talk about how Petronas intends to seize opportunities and deliver profitable growth responsibly and sustainably in 2022 and beyond. Permit me to begin today's presentation by placing on record my thanks, my sincere and humble thanks to the employees of Petronas for their efforts and their sacrifices to date. The results that I'm about to share with you today, along with the team, were delivered under very challenging circumstances, thrust upon every member of the Petronas family, not least of all by the pandemic. As at March 1st, Petronas reported north of 15,092 COVID-19 cases and 210 clusters within the group. This was tracked since March 2020. Sadly, also to date, 64 deaths involving staff and contractors were recorded due to COVID-19. Although vaccination and booster rates for staff have achieved the 80% mark, the impact of the pandemic remains ever present in our day-to-day operations. Upholding the safety of our people continues to be Petronas' top priority. Significant efforts and measures have been and continue to be undertaken. Work practices have been modified and accompanied by extensive vaccination programs for staff, contractors, and even the community where we operate. Together with this, various targeted interventions were also implemented to support our employees' mental well-being. As a result, I'm pleased to report the group could ensure its operations continued and we could run safely, reliably, and efficiently with minimal interruptions. In 2021, major fires were contained to just one incident, and this was the lowest in the past 12-year period. Tier 1 process safety events were recorded at 70% below the 5-year industrial peer average. There were deliberate efforts, and these efforts were essential in fulfilling our responsibility in ensuring energy security, serving our customers the best we could through the many challenges we faced. Delivering the group's performance, which Puan Liza will share with you shortly, did not come easily. What we will report today was delivered as a result of the sheer dedication, sacrifice, and service of the 48,000 employees of Petronas and the efforts of many parties, namely our valued stakeholders, for their confidence and trust in the company. Also to the federal and state governments and the host governments of our international operations, the agencies and the authorities, our business partners, our vendors, and last, but certainly not least, our valued customers for the continuing support and steadfast belief in Petronas as their preferred energy and solutions partner. Distinguished guests, those of you in the hall and those of you dialing in, let's unpack some key factors driving the extreme swings we see in the energy industry today. Firstly, it continues to be driven by the threat of new and highly infectious COVID-19 variants, derailing economic recovery. The pandemic has infected over 436 million people worldwide, with close to 6 million deaths, and it continues to rage on. In Malaysia, we have experienced more than 3 million COVID-19 cases and more than 32,000 cumulative deaths. And the number of cases continues to rise. Even as we hope that the dreaded Delta variant released its stranglehold on the country as the dominant variant, our friend Omicron emerged to take up the mantle. Secondly, global demand for energy and commodities picked up steam in 2021, faster than we had expected with the accelerated reopening of economies. As a result, Brent price averaged at almost $71 per barrel for the year ended 31 December 2021. This was a full 70% higher compared with the $41.67 per barrel in 2020. The robust recovery in oil prices was driven by the reopening of economies, the steadfast, active market management by OPEC+, as well as fuel switching due to the global energy crisis, which resulted in oil demand outpacing supply. Spot LNG prices in Asia averaged $18.60 per MMBTU in 2021. Get the next statistic. That was almost a full 300% higher compared to the $4.40 per MMBTU last year. This surge in price was led by rising demand for gas in Europe to prepare for winter and competition for fuel in China as the coal crisis worsened and pushing prices to historic highs. Urea and methanol prices also rebounded from the supply shortage scenario in 2021. Urea prices doubled to $511 per metric ton from $250 per metric ton in 2020, while methanol prices increased to $397 per metric ton compared with just $240 per metric ton in 2020. While the energy industry is seen to have regained a direct measure of a certain measure of stability and better times, let's look at the underlying data. The underlying data indicates that the apparent recovery in the oil and gas sector that you see today remains fragile. There are many brewing uncertainties in the macro environment, and the market will continue to be very volatile in the face of sudden shocks to the market. The third factor, the one that we cannot ignore, is the push for energy transition. This push is very real, and it is reshaping our business landscape faster than ever. As we now enter a post-Glasgow era, it has become abundantly clear after COP26 that a more intense focus on decarbonization efforts must be accelerated, and that must happen now. Governments, they're all transitioning towards a low-carbon future. This is not projection or conjecture because, as I speak, approximately 90% of the world's governments has committed to net zero targets in one form or another. Malaysia is no exception. It too has pledged to reduce its carbon intensity by 45% by 2030 and aim to deliver net zero by 2050. Investing communities are now demanding greater transparency of ESG compliance. The energy industry responding to the energy transition in typically three broad approaches. Approach number one, adopt a drastic shift, take an all-in approach, change your operating model and business focus, and turn yourself into a pure low-carbon play. A wholesale switch from hydrocarbon delivery to electrons. Approach two, use a middle path, become an integrated energy player where the core oil and gas portfolio is still expanded, even as the same entities capture growth opportunities in low-carbon energy solutions. Approach number three, it's a more traditionalist approach. Take a long-term view, focus on monetizing the value of your hydrocarbons, but continuously invest in technologies that reduce emissions intensity. I've gone on record numerous times to convey that we need to embrace, consumers, societies need to embrace, that there are many different pathways to a lower carbon future. Petronas must take bold, decisive actions now, or risk missing out on this very narrow window of opportunity to navigate the energy transition successfully, or take the risk of getting left behind permanently. In summary, 2021 was a year that saw multi-speed recovery across economies. This resulted in an uneven pace of demand recovery for our oil and gas products. Nevertheless, oil and gas prices rebounded despite the overarching volatility you saw. Ladies and gentlemen, in line with the other majors, I can now say that I'm very pleased, satisfied, elated, relieved to announce that Petronas has delivered a strong financial performance. We managed to take advantage of the oil price and market recovery, and we paired this with strong integrated operational performance to maximize our cash generators. Leveraging on the strength of our integrated portfolio, the group made significant progress in line with our three-pronged growth strategy and net zero carbon emissions aspiration by 2050. Petronas captured new market opportunities and high-graded its portfolio to be more robust and more sustainable in the long run, while still positively contributing to society. In this stride, Petronas also acknowledges the importance of transparency on climate-related disclosures for energy to be responsibly delivered in a way that benefits both people and the planet. Given its importance, in November last year, Petronas endorsed the World Bank's Zero Routine Flaring by 2030 initiative and adopted the recommendations of the Task Force on Climate-Related Financial Disclosure. Overall, Petronas remained true to its belief, staying true to prudent financial management and exercised firm discipline when it reinvested to strengthen its core portfolio, even as it managed financial commitments and debt obligations. This contributed to the sustainable growth and strong financial performance of 2021. I know you're waiting for the numbers. Lisa will be elaborating further on our financial and operational highlights in a very short while. Even as the group discharged its duties to maximize the value of Malaysia's hydrocarbon resources for the benefit of the nation, for the people, Petronas contributed to stakeholders in the form, well, in many forms, in the forms of cash payments, tax, export duties, state sales tax, and dividend. In 2021, we paid the scheduled 25 billion dividend payments to the government of Malaysia. In this opportunity, I would also like to highlight that Petronas values the amanah given by our stakeholders to be their partner in progress. I am pleased to share that all parties have committed in the form of mutually beneficial solutions, which secured the path to value creation opportunities. Specifically, on our part, Petronas will continue to grow in our heartlands in the states of Sabah and Sarawak to ensure shared prosperity. And this will be anchored on our mutual commitment to develop the respective states' oil and gas industry. This will be delivered by inviting increased participation throughout the value chain. For the Malaysian OGSE sector, our initiatives to elevate and improve the resilience and robustness of the ecosystem at large continues. In our role as a catalyst for the OGSE sector, we will work together with our partners, especially as the industry now moves at pace to decarbonize operations. Now, such a transition must be executed responsibly and sustainably, applying low-carbon technologies as systematically as possible. Ladies and gentlemen, members of the audience, as we set out to serve our customers safely and reliably, Petronas has never wavered from our commitment towards ensuring the well-being of societies wherever we operate. Anchored on our statement of purpose, we recognize the importance of enriching the lives around us, especially in these prolonged and trying times. Well, here are some numbers you may not be familiar with. It may come as a surprise to some of you that within the past 2 years alone, Petronas registered 1.4 billion ringgit in CSR contributions in areas of education, community well-being, and development, as well as the environment. Petronas sustained its support towards COVID-19 relief efforts both in Malaysia and abroad, where we have operations throughout 2021. More recently, the group has also contributed 25 million ringgit to assist the Malaysian government with post-flood recovery for the victims who were impacted by the enormous floods that swept through Malaysia. I would like to emphasize that the Petronas commitment to Malaysians and societies at large where we serve remains intact. This remains even as we continue to navigate in a volatile and uncertain business landscape. In discharging our obligation and duty as a national oil company, we remain determined to responsibly manage the hydrocarbon resources entrusted to us for the benefit and well-being of the communities where we operate. Ladies and gentlemen, 2021 has indeed provided the energy industry with some respite from the unprecedented challenges of 2020. As you will hear soon from Lisa, the results we have registered for the year in review demonstrates Petronas' resilience and the strength of our integrated portfolio. However, capitalizing on this period to make significant returns will require Petronas to continue focusing on prudent financial management and continuous reinvestment to strengthen our core and grow our business portfolio. I will talk about this towards the end of the session. So let's get to hear what you're all here for. You don't want to hear me droning on, namely Petronas' full year financial and operational performance. Puan Liza, the floor is yours.
Thank you, Datuk Tengku Taufik. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh and good afternoon. Quarter 4 2021 saw Brent price climb to an average of $79.76 per barrel. The improvement in price was primarily influenced by increase in economic activities globally, which coincided with oil supply disruptions in Ecuador, Nigeria, and Libya. The year 2021 concluded with Brent price averaging at $70.91 per barrel. Capitalizing on this improved macroeconomic landscape and leveraging on its integrated business, Petronas delivered strong financial performance for 2021 with profit after tax of 48.6 billion ringgit, EBITDA of 100 billion ringgit, and CFFO of 79 billion ringgit. Notwithstanding, Petronas continues to be vigilant on the heightened market volatility and uncertainty following the emergence of COVID-19 Omicron variant, gradual easing of OPEC Plus production curtailment, and coordinated strategic petroleum reserves releases, mainly from the US. Taking cognizance on the need to intensify progress towards energy transition, Petronas accelerates efforts in pursuing growth in non-traditional business, whilst continuously strengthening its core business. Being a responsible organization, Petronas remains committed to reduce emissions from its operations and the wider supply chain. Petronas remains resolute in maximizing value to its stakeholders and creating positive social impact to the society. Ladies and gentlemen, Petronas' result for the financial year ended 31st December 2021 is compared against corresponding period last year. Leveraging on Petronas' integrated value chain, imperative actions were deployed at pace to create value against prevailing market conditions. Amongst others, upstream business increased gas production following higher Peninsular Malaysia gas demand from the power sector. Downstream business sustained strong overall equipment effectiveness, which resulted in increased production of ethane-based petrochemical products. Coupled with proactive marketing efforts in a recovering market, the business was able to capture the market upside with increased sales volume. Gas and New Energy business continues to operate with agility, maximizing gas and LNG sales to fulfill the market supply-demand gap. The group also completed 19 GHG emissions reduction projects during the year, a testimony of its commitment towards sustainability. The group recorded revenue of 248 billion ringgit, an increase of 39% from 179 billion ringgit in the previous year, mainly due to higher average realized prices from petroleum products, LNG, and crude oil and condensates. Profit after tax stood at 48.6 billion ringgit as compared to loss after tax of 21 billion ringgit last year, in line with higher revenue and lower net impairment losses on assets. Group costs stood at 204 billion ringgit, a slight increase against last year due to higher product costs and higher tax expense. Cash flows from operations remain robust at 79 billion ringgit, in line with higher cash operating profits. This improved performance has enabled us to support our investments, dividend payments to shareholders, as well as contribute towards the National Trust Fund, whilst managing financial commitments and debt obligations. Furthermore, various contributions were extended to the community, including, amongst others, to support flood relief efforts, COVID-19 assistance, creating job opportunities for new graduates, as well as providing scholarships and training. In line with higher profits, we registered EBITDA of 100 billion ringgit, 82% increase against last year. Total assets of 635 billion ringgit, as at 31st December 2021, increased by 11% against 31st December 2020. Meanwhile, shareholders' equity increased to 351 billion ringgit compared to 331 billion ringgit, mainly attributable to the profit recorded during the year. Ladies and gentlemen, aligned with Petronas' three-pronged growth strategy, we continue to strengthen our core business and pursue growth by upholding strict capital discipline. We intensified our capital allocation exercise to ensure sufficient allocation for our core cash-generating assets and increase allocation for investment in growth, or what we call step-outs. Over the next 5 years, starting from 2022, we have allocated circa 20% of total planned capex for step-outs. During the year, while we continue investing, many projects were affected by the prolonged movement restriction order, coupled with supply chain interruptions. Both our domestic and international projects experienced delays and deferments, resulting in lower overall capex spend during the year of 30.5 billion ringgit. Notwithstanding, close to 1 billion ringgit was spent on step-outs, mainly on renewables. Activities have been picking up since early 2022, in line with the reopening of borders and ease of travelling. Petronas will continue to pursue its investments in Malaysia and outside Malaysia, and we expect to increase spending, demonstrating our commitment to accelerate growth. The group recorded higher cash balance of 178 billion ringgit as at 31st December 2021, predominantly due to robust CFFO generated against last year. This has enabled us to sufficiently support capex and our growth commitments, dividend payment to our shareholders, as well as contribute towards the National Trust Fund while managing financial commitments and debt obligation. We are privileged to be able to help and contribute towards the nation's sustainability and community well-being. Our assistance on flood reliefs extends beyond monetary value and includes delivery of emergency diesel supply to power up temporary water pumps. Our employees also volunteered in post-flood cleanups in affected areas. Significant efforts were intensified to minimize the impact of COVID-19 pandemic to our ecosystem, including the setting up of 6 industrial vaccination centers across Malaysia. In addition, more than 3,000 employment opportunities were provided through graduate and internship programs. With strong liquidity management practices, Petronas continues to lead its peers in terms of CFFO margin. We achieved 32% CFFO margin during the period, reflecting our efficiency in converting revenue into cash. Ladies and gentlemen, our financial performance was backed by strong business performance across the value chain. Upstream business registered 34 billion ringgit profit after tax as compared to loss of 10 billion ringgit last year. This is primarily driven by higher revenue and lower impairment losses on assets, negated by higher tax, product costs, and cash payment in line with higher prices. Similarly, gas and new energy business registered 15 billion ringgit profit after tax as compared to loss of 10 billion ringgit in the previous year, mainly attributed to higher revenue coupled with lower impairment losses on assets, partially offset by higher product costs. Downstream business also registered profit of 0.7 billion ringgit against loss of 3 billion ringgit last year, arising from improved petrochemicals and refining margins, negated by higher impairment losses on assets. Meanwhile, corporate and others recorded a loss of 1 billion ringgit due to higher operating expenditure incurred, partially cushioned by lower impairment losses and favorable foreign exchange gain as a result of the strengthening of US dollar against the ringgit. Moving on to operational highlights. Upstream business continues to deliver projects and commercial solutions across the globe safely. Upstream recorded a total daily production average of 2.3 million barrels of oil equivalent per day in 2021, higher than in 2020, mainly due to higher natural gas production for both Malaysia and international operations to meet stronger demand, coupled with higher crude oil production from international operations. During the year, Upstream has attained several significant achievements. 21 projects in Malaysia and abroad achieved their first hydrocarbon, which includes 4 greenfields and 17 brownfields. A total of 22 projects achieved final investment decision, including 18 in Malaysia, 2 in Indonesia, 1 in Brazil, and 1 in Turkmenistan. In addition, Upstream made 8 exploration discoveries, with 6 discoveries off the coast of Sarawak and off the coast of Sabah in Malaysia, 1 discovery offshore East Java in Indonesia, and 1 discovery offshore Brunei. Petronas has also signed 7 production sharing contracts with existing and new players. Block PM524, located in the prolific area of the Malay Basin, was the most recent PSC signed on 1st November 2021 with Petronas Carigali and POSCO International E&P Malaysia. POSCO, a new player in Malaysia's upstream oil and gas, brings to the table their experiences of operating gas fields in other parts of this region, including technological development of carbon capture and storage. Petronas has awarded 6 out of 13 offshore exploration blocks offered in the Malaysia Bid Round 2021. This success is contributed to the significant enhancement that were introduced, which include the enhanced profitability PSC terms for shallow water blocks, larger block sizes, and flexible bidding options, thereby resulting in a win-win arrangement. At the same time, it further reinforces Malaysia's attractiveness as a destination for industry players seeking to grow their energy portfolio. Meanwhile, Petronas Carigali Jabung Limited and its partners in November 2021 signed a 20-year extension for the Jabung PSC in Indonesia from 2023 to 2043. This extension allows Petronas Carigali Jabung to continue creating value in Indonesia's energy industry. Petronas Petroleo Brasil Limitada and its consortium partners won the Sepia field, located in the Santos Basin, during Brazil's second transfer of rights surplus volume bidding round in December 2021. This marks Petronas' entry into the prolific Santos Basin, which further strengthens our investment in Brazil and our presence in the Americas in line with our global growth strategy. Petronas E&P Argentina achieved first full cargo export of Medanito crude to Trafigura and Petrobras in December 2021, testament of its efforts to create value. Throughout 2021, the company exported 6 cargoes in total, making it amongst the top 3 exporters of Medanito crude. Petronas aims to position and establish Malaysia as a leading carbon capture and storage (CCS) solution hub in the region. Deliberate steps are taken to explore opportunities for CCS technologies as well as carbon dioxide storage solutions to help decarbonize Malaysia's upstream industry and provide CO2 storage solutions for the region. This includes collaboration with industry partners as part of its transition towards a lower carbon future. Several memorandums of understanding have been signed in 2021, including with Sarawak Shell Berhad, ExxonMobil E&P Malaysia, and also with POSCO International and POSCO Engineering and Construction. In line with our commitment towards achieving net zero carbon emissions by 2050, Upstream business completed 8 GHG emissions reduction projects in Peninsular Malaysia, Sarawak, and Sabah during the year. The cumulative GHG emissions reduction from all 8 projects is expected to be around 3.83 million tons of CO2 equivalent per year. Petronas Carigali was recognized for its HSE performance for the year 2021 during the 39th Malaysian Society for Occupational Safety and Health Awards ceremony. Petronas Carigali received 15 Gold Merit Awards and 6 Gold Class 1 awards. Ladies and gentlemen, Gas and New Energy business remains committed towards providing low-carbon solutions to support customers' aspiration through operational excellence. Petronas continues to grow its LNG leadership and has delivered 12,000 LNG cargoes to date, from the Petronas LNG complex in Bintulu since operations began in 1983. Additionally, Petronas concluded 6.7 million tons per annum of LNG sales. Following the maiden carbon-neutral LNG cargo delivery to Shikoku Electric, Petronas signed deals with China's Synergy Group Company Limited and Hiroshima Gas, making it a total of 5 carbon-neutral LNG cargo deals concluded to date. Petronas achieved higher sales gas performance in 2021 compared to last year. This was contributed by higher demand from the power sector. Petronas also secured close to 700 million scf per day of natural gas supply deals from new and existing customers. Petronas continues to provide reliable supply of natural gas through its suite of LNG solutions. In 2021, 960 virtual pipeline system and LNG bunkering deliveries were completed. In addition, more than 2,000 LNG deliveries in ISO tanks were supplied to customers in China. Petronas awarded 2 front-end engineering design contracts to the consortium of JGC Corporation and Samsung Heavy Industry, and also to Saipem, as part of an international dual-fit design competition for a near-shore LNG project in Sabah. The project, with a minimum capacity of 2 million tons per annum, is planned for final investment decision by end of 2022 and ready for startup by end of 2026. Meanwhile, Petronas New Energy has close to 1 gigawatt of solar capacity in operation and under development. This includes ongoing solar installations to power Petronas' asset in Malaysia, such as a 7.4 megawatt peak solar rooftop installation at University Technology Petronas, a 1.4 megawatt peak solar rooftop installation at Institute Technology Petroleum Petronas, and a 49 megawatt peak solar installation at the Pengerang Integrated Complex in Johor. Petronas, together with Sumitomo Corporation and Tokyo Gas, have agreed to conduct a joint feasibility study for the production of carbon-neutral methane in Malaysia using green hydrogen from renewables and carbon dioxide. The study is intended to establish an alternative cleaner energy source for the Japan market. Ladies and gentlemen, downstream business recorded stable operations with overall equipment effectiveness sustained at 93.3% on the back of strong asset reliability. During the year, Petronas Chemicals Group sustained plant utilization rate of above 90%, arising from solid operational performance and efficient statutory turnarounds at 4 of its plants. Higher production of petrochemical products at 10.4 million metric tons was produced on the back of higher ethane supply, with overall sales volume of 8.2 million metric tons. Marketing business recorded sales volume of over 21 billion litres in 2021, following market recovery. Petronas Marine completed its first LNG bunkering operations in Sabah for the 180,000-ton LNG-powered vessel HL Green, supplying cleaner energy solution for the use of the vessel on its shipping journey. This solidifies Petronas Marine as a one-stop marine solutions partner, providing cost-competitive, cleaner fuels to customers and a major step towards developing Malaysia as an LNG bunkering hub. BRB International commenced commercial operation of its 8,000 tons per annum silicone blending facility in Gebeng, Kuantan. The facility manufactures cosmetic-grade silicone gum blend, technical and food-grade silicone emulsion, and silicone anti-foam for the Asia-Pacific and Middle East Africa regions. It is the first and only producer of silicone anti-foam in Southeast Asia. Petronas Dagangan entered into a memorandum of understanding to deploy direct current fast electric vehicle chargers at Petronas Station by the first half of 2022 in anticipation of the shift towards more energy-efficient vehicles. The deployment will provide end-to-end coverage of faster charging facilities, leveraging on Petronas Dagangan's extensive network of stations along the North-South Expressway and East Coast Expressway. PDB and Petco Trading UK Limited, together with Malaysia Aviation Group and Nesti, celebrated a significant milestone when a flight by Malaysia Airlines safely landed in Kuala Lumpur from Amsterdam, fueled by Sustainable Aviation Fuel, or SAF. The SAF was a blend of 38% waste and residue combined with conventional jet fuel. Ladies and gentlemen, that brings us to the end of the result announcement, and I thank you for your kind attention.
Thank you, Puan Liza. Next, I would like to invite Datuk Tengku Taufik back to the rostrum to deliver the second part of his presentation.
Ladies and gents, I'm an accountant by training. That was a hell of a lot of numbers. Do you need a bit of time to stretch? Okay, if you're fine, then let's continue. Thank you, Puan Liza. Ladies and gentlemen, as you would have observed, Petronas, together with industry peers, have benefited from the pace of recovery we saw in 2021. While there's a certain degree of rising optimism for the year ahead, the board and management have decided it will be prudent to continue adopting prudent financial management and still hold on to a relatively cautious outlook. The challenges illustrated earlier in my speech continue to remain significant, at least for a good while yet, amplified by greater calls for climate action and emissions reduction. Petronas must make its move to navigate through this turbulence and lay the foundation for our future. Let's not ignore the obvious. Even as we gather here today, the impact of the ongoing conflict between Russia and Ukraine has already caused commodity prices to swing wildly. In our role as an energy player, even as we navigate this very volatile period, Petronas must be responsible. It must make every effort not to disrupt the energy security of Malaysia and the energy security of all its customers around the world. All of the deliberate efforts and measures that have been undertaken so far aims to ensure that we remain on a steady footing to weather possible market shocks. I believe the stage is now set in 2022 to be a year for Petronas to deliver even more meaningfully as a progressive energy and solutions partner enriching lives for a sustainable future. Allow me to now briefly share with you how Petronas intends to seize opportunities with two simple, straightforward aims. Firstly, Petronas must strengthen its core. Secondly, Petronas must grow its business portfolio. We will endeavor to do this while we deliver profitable growth responsibly and sustainably, not only for this year, but beyond. Let's first look at our core portfolio. I explained that broadly, companies have adopted one of the three possible approaches earlier. At this point, I want to emphasize that Petronas is not abandoning hydrocarbons, even as we take a phase shift to integrate more renewables and lower carbon solutions, as well as specialty chemicals into our portfolio. Petronas' position is that a decarbonized future, and I have to repeat this many, many times, Petronas' position is that a decarbonized future is not a future entirely absent of hydrocarbons. The chemists in the room may scratch their heads, because the real challenge before the world, before humanity, is to deal with the true adversary that the planet faces, its emissions. Whether we like it or not, oil and gas will still be a part of the energy mix for decades to come, and especially to feed the growth needs of the energy-hungry countries in Asia. As a national oil company, Petronas recognizes its amanah in maximizing the value of the nation's hydrocarbon resources. This responsibility is enshrined in the 1974 Petroleum Development Act that brought us into being. It remains our duty to provide long-term economic value creation for shared prosperity and energy security. In fact, as you heard earlier, our Malaysia bid round 2021 was one of our most successful bidding rounds, where close to 50% of the acreages we offered were taken up by a spectrum of both small and major players. As part of our continuing commitment to promote Malaysia as a world-class investment destination, the Malaysia Bid Round 2022, this year's edition, was launched in January with the theme that your advantaged energy is here. There are 14 exploration blocks on offer in prolific geological provinces within the Malay, Sabah and Sarawak basins. And this further demonstrates Malaysia still has a vibrant oil and gas landscape. Let's move to gas and LNG. We view that the demand for gas and LNG is expected to remain resilient. Petronas believes that natural gas is still well positioned as a transition fuel for economies wanting to meet lower carbon aspirations. Therefore, as among the largest LNG producers in the world, Petronas recognizes it has a responsibility to ensure a reliable supply of LNG at a cost to serve to support this energy transition. To date, we've already delivered 12,000 LNG cargoes from the Petronas LNG complex in Bintulu, Sarawak, and we will continue to invest in LNG assets, such as the new nearshore LNG project in Sabah that Lisa mentioned earlier, with a minimum capacity of 2 million tons per annum. We are hoping and praying that this will achieve FID by the end of this year. I'm very pleased to share that our renewable energy capacity under Petronas New Energy has nearly tripled since 2018. We are now close to 1 gigawatt of solar capacity in operation and under development. Downstream, we remain focused on the safe startup and stable operations of the Pengerang Integrated Complex. Our listed subsidiary, Petronas Chemicals Group, will also steadfastly continue to pursue growth by extending its value chain into specialty chemicals. That's the core portfolio. I hope everyone in the room, everyone dialing in, listening in, can appreciate that the opportunities in our core portfolio remains viable as oil and gas continues to be essential sources of energy to propel the global economy as it recovers from the effects of the pandemic. However, as an oil and gas and energy player, we can no longer operate under a business-as-usual approach. Simply, it will not get us to our net zero aspiration by 2050, nor can we expect to serve as an energy partner for our customers who are increasingly demanding for green energy. So with the significant progress achieved under our core portfolio in 2021, we will now focus also on reinvesting towards the decarbonization of our operations and also seize new opportunities for growth. Petronas' priority going forward is to deliver energy from our core portfolio as differentiated products. Here we go. Taufik throws out another theme. What is a differentiated product? These are products that are safe. That's our license to operate. Produce responsibly. They are cost optimized, and their emissions are abated. And these all are elements necessary to ensure the energy security and sustainability of Malaysia and our customers across the globe. Ladies and gentlemen, over the years, Petronas has undertaken purposeful actions to reduce carbon emissions since we embarked on our sustainability journey more than 2 decades ago. It's not a new, fresh start. We declared our carbon commitments in 2012. Since then, Petronas has responded decisively to accelerated energy transition with clarity and with discipline, and supported by the right ecosystem for growth, as the company continued to put in place the new energy division, which was combined with the gas business in 2018. In 2024, we declared our midterm targets for 2024, rather, and we announced our aspiration in 2020 to achieve net zero carbon emissions by 2050. But beyond these steps, we continue to see a strong necessity from the urgency of the climate crisis. I don't have to talk to you about the impact of climate. We have seen this up close, as well as the increasing pressure from all groups of stakeholders to demonstrate a tangible commitment to the green transition. Therefore, Petronas must now take bold, decisive actions, or risking that missing the narrow window of opportunity to navigate the energy transition successfully. We risk getting permanently left behind. So we must now be focused on building a resilient portfolio that can contend with energy transition and one that can seize the attractive opportunities that the energy transition presents. So, in this regard, permit me at this juncture to make 2 important announcements. As Petronas undertakes its next phase of growth, we need to take the natural steps to amplify our commitments and elevate the progress that we've achieved under our gas and new energy business thus far. We remain determined to grow profitably at scale and at pace in our new energy business. How will we do so? We will establish a new independent entity focused fully on cleaner energy solutions that will capture opportunities in the energy transition alongside our core portfolio. I want to stress, this exists and shall flourish alongside our core portfolio. I stated earlier, we are not ditching hydrocarbons. And this new entity will be launched sometime in the middle of this year. This entity will provide customers with lower carbon solutions in 3 core offerings: renewables, hydrogen, and green mobility. The ambition is for this entity to become eventually uncompromisingly green, to solve customers' needs for clean energy solutions and support the shared global aspiration for a lower carbon future. That's the first announcement. I don't forget the core. As hydrocarbons, as I've repeatedly stressed, will continue and remain an important component of the energy mix of the world as well as our portfolio, I'm also pleased to announce the setup of a centralized carbon management unit in Petronas. This new unit will focus on accelerating Petronas' decarbonization efforts across its entire integrated value chain by managing what is likely to be a carbon storage portfolio for emissions produced by our operations and potentially establishing a regional storage hub for carbon emissions as a revenue generator. We are set to accelerate our growth in these new spaces with this vehicle, together with the carbon management unit. Petronas is confident that with the strength and reliability of our core portfolio, combined with this new suite of offerings, we will provide our customers eventually with an energy superstore that powers businesses and fuels progress in a just and sustainable manner. Rest assured, members of the media, those of you present, we will be updating you quite regularly on the development of this exciting journey. As we position ourselves to seize opportunities for future growth, Petronas will continue to uphold the highest standards of governance and integrity for the well-being of the organization. Ladies and gentlemen, a lot for you to absorb, but in closing, the stage is set for 2022 to be a year for Petronas to step up and step up even more meaningfully in pursuing its purpose, to become a progressive energy and solutions partner enriching lives for a sustainable future. The strong performance we registered in 2021 demonstrates the dedication and the resilience and the strength of our workforce, combined with a robust integrated portfolio. This has taken us through 2 years of extreme disruptions to the energy ecosystem. As we progress to capitalize on this period, Petronas will continue its efforts to safely deliver commercial and operational excellence. We remain committed to exercising firm and rigorous discipline when reinvesting, whether it be to strengthen our core or to grow our portfolio. We will do this as we prudently manage our financial commitments and our debt obligations. As a group, we're determined to seize new opportunities for a sustainable, profitable growth as we uphold our commitment to our shareholder and lay the foundation for our future growth. You've seen this. We're signaling this with the launch of the new entity and the setup of the carbon management unit, which I described earlier. We will, however, not forget our role as a national oil company in growing the value pie for our stakeholders and the Malaysian OGSE sector so that both can thrive alongside Petronas. We'll also continue to discharge our duty in ensuring the well-being of society wherever we operate. As the macro environment will continue to be shaped by events of the past year, combined with what you can evidently see, heightened geopolitical flashpoints, both causing commodity prices to swing wildly, Petronas will remain cautious and adopt prudent financial management to weather any possible market shocks. So as I conclude, let me take this opportunity once again to thank our employees, our partners, our stakeholders for their unwavering contribution and their support. We look forward to pursuing these new areas with you as we move to thrive together in this next phase of growth. I thank you for joining us today. The executive leadership team and I will be available to take questions from you during the press conference shortly. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Datuk Tengku. Ladies and gentlemen, kindly turn your attention to the screen in front of you to see Petronas' achievements throughout 2021 and what we look forward to this year. All right, then, ladies and gentlemen, it is now time for the Q&A session. A reminder that all information shared here is embargoed until 5 p.m. For everyone in the hall, please use the microphone when asking your questions. As you can see, there are 4 microphones stationed in the middle, left, and right of the hall. Please state your name and the media organization that you represent before asking your question. We will also be taking questions from our international media friends who have joined us virtually via the live chat box. We seek your kind cooperation to keep all queries relevant to the group's financial performance and ask just one question to allow everyone here an opportunity to participate. The executive leadership team will not be taking any questions after this session. Ladies and gentlemen, let us begin. May we have the first question, please?
Hi everyone. Adam from The Edge here. Thanks for taking my question. So my question is, considering the swing in commodity prices, how do you see gas consumption in the near term, perhaps 3 to 6 months or 12 months? And how will it impact Petronas on Malaysia being the 5th largest exporter of natural gas? Thanks.
Thank you, Adam. That's a great question. And I will also pass this to Encik Adnan because that's directly under his portfolio. Thank God I brought him. So let's be very clear. Insofar as a transition fuel, Petronas' position has always been that natural gas is ideally positioned. The infrastructure is there. Its transportable form is a proven technology. As we have pointed out, over 12,000 cargoes of LNG have already been safely delivered by the group to its many customers around the world. Insofar as what is going to be displaced as we look towards 2040, 2050, we still see that oil and gas, depending on which projection you look at, even in the most aggressive climate transition ones, oil and gas still will make up 40% by the end of the 2040, 2050 period. Of that, clearly what's being displaced more is oil. Insofar as gas is an offering that we believe in, you saw already, we didn't realize it, time has flown. We're already reaching 960 cargoes of this VPS, and we are also delivering it in ISO tanks, meaning that customers both on and off the grid are pointing towards a growth in the demand of natural gas. You asked, where is gas demand pointing towards? At a macro level, world level, we have, and I don't want to use the words too aggressively, I want to be quite measured here. We have, as an industry, unfortunately, been quite, how do I say it, slow in uptaking investment over the last decades because of stakeholder pressure to move away from carbon-intensive portfolios. However, we cannot forsake a good outcome in trying to push for a perfect outcome. Gas and exploration for gas, in my view, should continue because gas offers a pathway to that net zero future we are looking for. There are means to make it a lot more carbon neutral. I'll invite Adnan to speak about his carbon neutral cargoes shortly. But insofar as the demand in the region, in Malaysia, we expect post the pandemic, definitely there will be an uptick. Adnan, you want to talk about the MTPAs as well as the kind of cargoes you will expect going forward?
I think going forward, we will definitely see an uptick in gas consumption. Be it LNG, be it pipe gas. In Malaysia as well, I think going forward, we will see increase in gas consumption. We can see even now, especially from the power sector. And as the country moves to decarbonize, we expect this consumption to increase, right? So in terms of LNG, we are also positioning ourselves to offer solutions, as mentioned by Tengku Taufik, carbon neutral LNG, whenever our customers requires it. We started with Shikoku Electric last year, and we are going to supply Hiroshima Gas and also Synergy in China. So these markets are picking up, and I think that the thirst for LNG will definitely be on our uptick.
Back to you, Trina.
May we have the second question, please?
Hi, Jason here. I'm going to need to ask more than one question, but I'm sure you won't mind. The first one is the customary oil price outlook for this year, given what's going on in Russia and Ukraine and whatnot. And related to that, I need to ask whether Petronas has any assets, projects, stakes, interests, or whatever that's may be affected by the U.S. Western sanctions on Russia. And thirdly is the question on capex. I think your capex last year was just 30.5, and it's way lower than your usual 40, 45. Any chance you could accelerate capex this year? Thanks.
So there are three. The usual, asking me to be the Nostradamus for the oil industry. Second, the impact of the conflict in Ukraine and Russia. And the third, what has happened on capex. So let me deal with each in turn. Now, insofar as the outlook for oil and gas, even as we speak today, the numbers are 3 digits. It's 100, 103 range bound. This is a bit of a departure from where we believe fundamentally it should be. I think many houses, and I'm inclined to believe this because of the underinvestment, because of the systematic release of volumes from OPEC Plus. Fundamentally, it should be within the $70 to $80 range. But as I mentioned, because we are extremely rigorous and disciplined in our spending, we do apply hurdle rates to actually test scenarios where these investments can even survive at 40 to 50. So that's the first one. With regards to Russia and Ukraine, I can tell you insofar as what is happening there, we cannot deny the fact that Russia is a key oil and gas producer. I think the bulk of Europe relies on Russian gas for its power. While the situation there is unfortunate, I can only say that as a responsible, reliable, and committed energy producer, we will still serve our consumers everywhere and our partners everywhere throughout this period where prices are going to be volatile. Insofar as Russian operations are concerned, I think we did have joint ventures with Lukoil, which we now have exited after the sale of the Azerbaijan position. We do also have operations in Iraq, where we have a collaboration with Gazprom. Insofar as any position to be taken, we are taking guidance on the kind of sanctions that are going to apply. We are not going to be rushing into any decisions here. We've taken into account the position and the geopolitics at country level. That is something that will stand guided if the policymakers take a stance. Finally, on capex. CapEx, yes, I know. We almost anticipated this question, but these are the harsh realities. And I told you about the more than 15,000 cases and the 64 deaths. We've had to work in a very different way. Most of you may not know this or have heard this in real gory detail, but the green bubbles we've constituted really cause a strain. Not just by us, because the contractors also want their teams to be safe. That's now a #1 priority. Insofar as making COVID-19 affected exposures safer to operate in, we had to isolate teams, manage how they interact. Either myself or Adnan sits twice a week to commandeer how to chair a group management team, to commandeer how we respond to this. That ranges from anything from evacuating people, creating green bubbles, putting interceptions in to stop supply disruptions, even boosters and vaccine regimes, and tracking people, which is why we keep those stats. We know who's been boosted and who's not been boosted, whether they follow government mandate, both at home and abroad. It is difficult to continue and expect that the supply chain was not disrupted over the last 12 months. So that's one primary reason. And obviously, there were also some transactions we wanted to take on that we aimed for, particularly to support both upstream and gas, where the valuations became a bit, shall we say, distorted because of the period that we live in. And therefore, the board wanted to exercise prudence and caution. And some of those M&A and non-organic acquisitions did not happen because we have to wait and make sure we're buying at the right value. So between a combination of real supply chain disruptions, COVID-19 impact, and the foregone M&A transactions, this is why we've seen us fall off. But you note the numbers, 2275 kBOED, we did not compromise on that. The planting of capex for business as usual did not come off. And even as I speak to you today, with the 30, anticipating one question, it's about half and half, domestic and international. We went on and continued to spend in that fashion. As for catch-up, we expect in Q1 and Q2 this year, there will be the catch-up. And I think insofar as feeding the parts of the portfolio that Adnan has just spoken about, we must make sure the gas molecules come through. We are committed to uphold the safe operations of our more mature fields. So it's a very delicate balance. And over and above that, ADIF is also starting to look at carbon management, as I have announced. So everybody's got their hands full, but we will catch up.
Okay, for the next one, we have received a question online, and it is from Amanda Battersby of Upstream Online. Her question goes, Tengku Muhammad Taufik mentioned closer collaboration by Petronas across the value chain with the states of Sabah and Sarawak. Please can he or other members of the team elaborate on this?
The collaboration with the Sabah and Sarawak states, I think this has already been adequately and if not copiously covered through our two agreements. With the state of Sabah, we entered into what we call the Commercial Collaboration Agreement, the CCA, and that espouses us participating in downstream by providing gas up to 120 MSCF, I believe, Adif. And we are also embarking on that near-shore LNG. More than that, as we develop and undertake these projects in Sabah, they also want us to allow local participation and capability building. Even as we speak right now, there's a team working in earnest to develop these professional programs and capability uplift programs with the state. With the state of Sarawak, I believe it was a commercial settlement agreement because there were differing views on what the state could have had over time and over the years. We have now seen ourselves collaborating far more closely with Petros, the state vehicle in Sarawak. I think they are also keenly taking positions upstream. Shortly after the signing of the CSA, you would have noted a number of PSCs, and I think these were lucrative PSCs, MLNG and Kumang, PSCs being entered into by Petros. They deal with us commercially. The state of Sarawak has been open and transparent in its dealing with us. We also want to nurture an OGSC sector beyond the usual suspects. So insofar as the dialogue and collaboration working in this space, it does not even stop only in core oil and gas. I want to take the opportunity to state that we see partners such as Sarawak Energy Berhad as potential collaborating partners because they now provide 90 megawatts of electrified power to LNG, our LNG facility. This helps us. They get a captive customer. This helps us in greening our operations because we move away from combustion through gas turbines. So there's a displacement and there's a very, very symbiotic relationship with Sarawak. And I specifically mentioned these are two heartlands within our own domestic. It does not mean I degrade all the other producing states. Please don't quote me that way. What we do with Sabah and Sarawak State is to ensure that the pie is enlarged, everybody gets an equitable share, and is a win-win for all.
We have another question from the floor.
Hi, Intan from The Star. I have more than one question, of course. So when you say that there's a pickup in capex for this year, can you give out the figure? And of course, at the same time, you're saying that it's a half-half for overseas and Malaysia. Yeah. But I'm seeing a little bit of mix-up because at the same time, you're saying that you want to boost the oil and gas service provider. But at the same time, you also want to invest further in new energy. So can you give
let me remove the confusion. Typically, you have seen that fairway of spending between the 40 to 50 billion mark. Okay, obviously, the last 2 years we've seen a drop off. Insofar as dealing with the capex guidance for this year, definitely we're going to come back, hope to come back to that usual 40 to 50 billion fairway. Within the 40 to 50 billion fairway, the board has now authorized that some of that capex be ring-fenced for decarbonizing. Remember, decarbonizing is not necessarily entirely in the new energy space. It also means working with OGSC to clean up our operations, make less emissions. What we've achieved in Bokor and Betty still involves our traditional OGSC. What we do with SURF and what we do with turning things into remote platforms also still involves local OGSC. It's not a departure from working with them. As we move forward into this clean energy space and there's an independent vehicle carrying it out, what I am saying is this vehicle will not invest or be ring-fenced by the rigors of a normal project management company or a capex-heavy company. It will need to take stakes, almost act like a venture capital / PE, and then take strategic decisions to nurture these new nascent areas around the 3 key themes that we mentioned to become really able to provide those cleaner energy solutions for the future. I think we have to plant the foundations now, because if we don't, I think we risk being left behind.
So just to understand, you are plucking out the new energy business.
Yes.
And like right now you have downstream, upstream,
Yeah.
now new energy.
Yeah, so
right
it used to be gas and new energy.
Yeah.
If I use the new acronym internally, I think we will figure out why I don't want to use the acronym. What Adnan handles is LNG gas business, right? So the LNG and gas business team, forget the acronym, is focusing its efforts on delivering gas solutions, right? The new energy, which used to be an appendage within gas and new energy, will now work with this clean energy solutions. This includes hydrogen. We are working with people even like Sarawak Energy, as I mentioned earlier. We are looking at moving into blue and green hydrogen quite quickly. Blue hydrogen, the closest to fruition, there's even already volume targets and identified customers. Green hydrogen is further away. We have to be very, very careful around the technology bets that we make. I think the space of green mobility, I've spoken about many times, and I think our presentations also outline this is going to clearly be something we have to respond to. OEMs and car makers are already declaring full electric fleets, full electric rollouts. And finally, as we look at renewables, that position that we took in M+ has already reached 1 gigawatt. We may have a 3 gigawatt, maybe a humble ambition in the near term, but nothing stops us within the next 2 to 3 decades to build up to something as substantial as a 30 to 40 gigawatt portfolio. We are evaluating the markets as we speak.
So basically, would there be a M&A in this space?
We do not exclude the possibility. Dia ni dapat lebih lah ni.
Okay, like the last one.
Okay. But this, of course, we cannot exclude non-organic means of growth. In fact, taking the bets early mean that we may take a minority first, become larger as time goes along, and then become a strategic shareholder over time.
So basically, back to the capex, because you want to increase the gas production, right?
Yeah.
So
Yeah.
more investment will go into, more capex will go into gas, is that correct?
When it comes to upstream, we are, well, let's look at our portfolio. Petronas is inherently 65 to 70% gassy. It's gassy. It's heavier in gas in any case. And Malaysia is blessed with many acreages with gas. Now, twofold. And this segues into what Adif is also looking at. Once the gas fields are depleted, it offers a solution. There's aquifers also as a solution for you to park your CO2. That's after you finish with it. But as you produce it, you face the challenge of high CO2, high contaminants. Of course, these will call for capex. Of course, there is still the need to fill up the almost 30 MTPA in Bintulu. There needs to be security there because we've committed to long-term contracts as well as taking positions in spot market. There is increasingly, as Adnan has alluded to, the demand to switch away from coal. I know our sister company, TNB, is taking a position where coal is going to end at some point. Therefore, we have to anticipate the stepping up of gas. And this has to be done in a viable, equitable, and a market-based environment, because the more difficult the gas is, the more costly it will be to bring it out and manage its emissions.
Okay, last question. Are you going to create a COO position?
That's the man.
Encik Adnan is going to be a
Yeah,
COO?
he's already there. I think we've already announced this, that he's taken on, and it was already published on our website. Yeah.
Just check your website, don't have.
Yeah?
Your website, don't see it.
You didn't see?
Ada internet?
Ada dah.
Okay.
Ada dah. Okay, okay.
Oh, so there's no more EVP for gas and new energy,
He
is
is
it?
EVP Gas and COO.
Okay. Noted.
All right? Thank you.
Thank you, Intan.
You ada bayar Triana lebih ke ni, ya? Macam dapat lebih je. Okay, I'm just...
Okay. The next question here to this gentleman.
Yep.
Hi, Sulhi from DH.
Yep.
In the previous downturn, Petronas renegotiate contracts with service providers. Now, with prices at elevated levels, could local suppliers and contractors look for another round of negotiation? Second, could the public expect local oil and gas company to do as well as Petronas moving forward? Last,
Can you repeat that question, please?
Sorry, the second.
Yeah.
Yes. Could the public expect the local oil and gas company to do as well as Petronas moving forward? And then last but not least, the following up stake sale to Russians Lukoil. What is Petronas' plan on the remaining stake in Shah Deniz project? Thank you.
I'll answer the third question first. There is no remaining stake in the Shah Deniz project because we have completed the sale to Lukoil, BP, and SOCAR. We have completed it already.
Oh, the 10% stake in the project.
The 15%. There's no 10%. I think there has been some reports that have only highlighted the 10% to one party. No, we've exited completely. You want to add to that? Yeah.
No, basically, it's 10% to Lukoil, and then about 1 to 2% to BP, and then the remaining 4% to SOCAR. Okay. So it totals up to 15%.
Yeah. So that last question is now off the bat. I think we managed to get about 2.2 billion, as reported in the press. So that's done. I'll answer the first question with regards to rate renegotiation. I think those of us long in pocket typically are short in memory, and it's also vice versa. Short in memory and long in pocket does not come together, unfortunately. Let's remember the last crisis. In 2014-2015, this is why we act with caution. When prices breached these levels, the last time we did, the crash came very quickly. And then there was much thematic discussion around whether oil was fit for 50, prompting many exercises that we undertook. I mean, not least of all, the Coral 2.0, plus also all the discussions with our contracting community to make ourselves sustainable. Now, Petronas had at that point signaled, we cannot compel a force, signaled, you need scale, depth, and expertise to weather downturns in a very cyclical business. And these cycles are getting shorter and shorter. Insofar as the rate renegotiation, as the world comes back to recovery and as the demand for energy also grows, the need for services will also expect to follow. We will continue to respect the commercial availability of assets, people, and pay the market rates. We want to be responsible in partnering the OGSC sector. Insofar as rate negotiations, I think we have always maintained that Petronas will uphold the best commercial practices. We will continue to open tender, and we will drive towards operational excellence, not only in the sense of safety, but also in making sure that the total delivered project meets that cost to serve threshold. I referred to it in one of the decks. Because whatever you deliver, if it's too expensive, you won't get to returns, and this needs to be able to cut through cycles. And that's the kind of cost management that we will adhere to. Insofar as the rate negotiations, I don't plan any immediate rate negotiation because we have to see how this market pans out. The second question is probably the most, I think it's glaring to you because there's been a departure. I'll not deny it. There's been a departure on where producers are and where service providers are. With regards to OGSC, can they expect to emulate results like ours? really the answer is how they manage their capital base and their cost efficiencies. Some people may have over-leveraged and found themselves taking on assets with high leverage, buying at the wrong point of the cycle. They have the ability to restructure that as the market returns. But this is unfortunate that sometimes there is a single job mentality within certain OGSC players, expecting a one-hit contract with players such as ourselves to be able to sustain an investment. It cannot. That is just realistically not possible. As requirements escalate, as demands for efficiency, energy efficiency and emissions go up, definitely there is a need to reinvest. And insofar as how the public OGSC sector is going to respond, I told you throughout the presentation earlier, we remain responsible partners. We want to be catalysts for the OGSC sector. We are even helping map out the transition in our activity outlook book. We have already not only hinted thematically, we've said these are the areas you need to address and these are the new spaces we intend to explore. So insofar as signaling and working with the contracting community, more can be done probably to catalyze as we come through this very difficult period. But insofar as our promise that the OGCSC sector will survive and hold is down to the individual entities and how they manage it, really. Yeah.
We'll be taking the next question from the gentleman on the right.
Hi, Hazwan from Berita Harian. I have two questions. First about dividend payout. For 2021, Petronas paid 25 billion to the government. So for this year, can we expect the dividend will be higher since the oil price right now also higher? And my second question about the new entity. This new entity you mentioned will focus on renewable energy, hydrogen, and also green mobility. So I just want to know why hydrogen? Do you think there will be more demand for hydrogen in the future? Since I think right now not many countries using hydrogen as their main source energy. That's all. Thank you.
Thank you. It's a great question, actually. Let's deal with hydrogen first, because the other question, you know, I'll read a script, right? Okay. The hydrogen question. The oil and gas industry is naturally positioned to take and grow into the adjacency we call hydrogen, because the chemistry and what we can do with steam reforming of methane already helps us move to producing blue hydrogen. To be very clear, hydrogen is an energy carrier, and it will be envisaged as part of an ecosystem where you will then have no emissions. Because if you combust hydrogen, water is the product. And at the end of the day, the adaptation, if you're looking at people producing gas turbines now, pipelines, moving to hydrogen, the chemistry and the engineering around it, it's a journey, but it's not an impossible journey. The trick now is to transport it. That's why you say it's difficult to see how hydrogen is going to be so widespread. Hydrogen, in order to transport it in liquid form, is as close to, if you remember your high school physics, as close to absolute zero at minus 250. Anand has just reminded me, minus 250 degrees. So until we've solved that part of the conundrum, the transportation of hydrogen will be the engineering riddle we have to fix. But if we move to blue hydrogen and sending it in the form such as ammonia, which is already done today, or methyl cyclohexane, which can be dealt with at room temperature, there's already ready available takers for that. In fact, without revealing too much, the foundational customers for hydrogen are typically the same players who will consume LNG. And because we're in the LNG space, you see the pathway? So there is a logic, same customers, same marketing, but the engineering needs to be dealt with. Need to get it down again, the cost to serve, in order to make sure we can sell it and people want to buy it. That's that sweet spot where the engineering will have to solve for it. Over and above that, If you read the research, there are so many colors of hydrogen. Blue lah, pink lah, brown lah. We clearly can go to blue, and we can move quickly to green if electrolysis helps with the production of hydrogen, eventually. The first question, dividend, yes. Can I I need you to reflect with dividend, the declared amount, 25B, you look at the prevailing price at that point in time. Well, in the whole of last year, it's 71. Today, you're saying it's 100, but it's only 2 months in. We don't know whether it's going to remain. I will always answer, once we survive the obligations of meeting our financial commitments, servicing our debt, fulfilling our growth needs, having that buffer for liquidity, if Petronas can afford it, the government will ask, the board will deliberate, we will engage, and then we will come to an adjustment as and when, if we can afford it. I see,
We've got a question online. Yep. And it's from Mark Rousseau of Energy Intelligence. His question is, one of the focus of Petronas' new energy unit is green mobility. What is Petronas planning to do in this field, and what are Petronas' targets?
It's already outlined in our immediate near-term target is work with OEMs and technology providers to get a decent number, and there can be anywhere between 20 to 30 parts of the infrastructure and charging setup points to set up in this year. The longer term, we may see a proliferation of higher and faster charging outputs to be deployed across Malaysia, but we are going to choose technology partners. We believe that what will really unlock electric mobility in Asia is the proliferation of infrastructure. I think everyone around here, and I will ask Sazali to comment on this because he is going to be ideally positioned to do this by entering into collaborations. In so far as our position with regards to, and a belief with regards to green mobility, the move by people like Volvo, Volkswagen, most of the makers in China towards ensuring that eventually their fleet will be entirely hybrid or entirely electric, it's a clear signal. And we think we cannot fail to respond to this. To make this really a green electric mobility, we will need to power this with renewables, which is why it comes together with the aspiration that we will grow our capacity in this sector. Maybe I ask Dato' Sazali to also weigh in with what are the near-term targets that the subsidiaries under his watch are going to pursue.
Thank you, Tengku Taufik. So basically, as interim, what we do is we're looking at the charging facilities at our station. So we work together with Mercedes and few other players to install an interim charging facilities in our station. But in parallel, we look at the end-to-end solution, look at how actually we can improve provide the solution for the battery itself, the replacement of battery, and looking at also type of vehicle, the two-wheeler and four-wheeler, those kind of study is a bit longer term. So one day we'll merge the solution of ecosystem and the interim solution. So that is our pathway of green mobility.
Thanks, Adol.
Okay, let's take our final question for the day. The lady on the right.
Hi, I'm May from Reuters. You spoke about not disrupting the energy supply in Europe with the current geopolitical risk. But with more European countries realizing that they need to reduce their reliance on Russian gas, do you see an opportunity for Petronas to expand operations in Europe or maybe increase exports there? Thank you.
Just like any other venture, if it meets the investment hurdle and the risk and reward is on the right path to being lucrative for us, of course, we would consider servicing customers wherever they may be. What is important for you to take away is, I think, as an industry, we are facing a gas shortage. Let's not point to just one conflict. We have not been spending enough because of a reaction and painting the energy industry as a villain in climate change. I do not want to refute that there is climate science behind climate change. We have to produce energy, and going for a perfect solution sometimes produces unintended consequences. The world is gas molecule short in total, right? I think we estimated this, Adnan and I worked out that in the next 2-3 years, we're going to be 25 to 28 million tons per annum short of LNG. We just have not stepped up to the table as industry to actually take on more gas because we were pursuing ideals in the policymaker space as well as the consumer space. I think gas, as I've repeatedly positioned Petronas' philosophy on this, is gas is the transitional fuel. We think that it will fuel the recovery post-COVID-19, and even, well, as high utility bills in Europe will bear testimony to, gas is still needed. Therefore, if wherever there is opportunity, if there is a return to it, and there are system molecules as well that you can get off the market, I think the team under Adnan is positioned to respond, but respond responsibly. Thank you.
And that question wraps up the Q&A session for today. We would now like to invite photographers to come forward for a photo op of the executive leadership team.